Stocks are up again, gold and bonds are down. Let's jump first, as we always do, into the weekly chart on the S&P 500. So far, the first green up candle's almost finished forming for the week. And again, it has been a long time since we've seen a nice big green up candle. The one that's forming so far is, gosh, I guess we've got to go all the way back to something like the end of August to see a candle like that. Market really hit its bottom back on the week ending, or at the end of the year, the last trading week of the year, 28th of December. The past week was a green spinning top, which of course means indecision tending up. And this is the first open box candle, a green open box we've had for a while. Excuse me, please. We see that the derivative oscillator is losing downward momentum. That price percent oscillator is heading up. We go from the weekly to the two-day chart, and of course it crossed over in the last completed two-day candle ending Wednesday the 9th. On Thursday, we saw another up candle. Again, not a strong one so far, really about not really going higher than the prior two-day candle. We'll see more about that when we look at the 4-hour chart. Derivative oscillator moving up, gaining upward momentum. Price percent oscillator heading up. We go from the two-day to the 4-hour, and that's where we see that sideways slide for about the last day and a half, almost 2 days really. Again, going up some in the afternoon, but not really pushing higher than it had been on the afternoon of the 9th. So again, are things starting to peter off? We look at the derivative oscillator, it's losing momentum. Price percent oscillator still heading up. Not as strongly and powerfully as it had been before at the end of the prior week, the beginning of this current week. But again, we'll just sort of see where things are. We don't have a down trade at this point if that 4-hour chart rolls over, because the two-day chart is in a confirmed up move at this point. So we go from the 4-hour chart back to the weekly. And again, S&P 500 up 0.39% for the day. The NASDAQ 100 up 0.29%, and again, a green up candle forming. First time in quite a while. Have to go all the way back to, again, the end of October there. I'm sorry, August there, for a candle of the size that we see at the close of the market on Thursday. Derivative oscillator losing downward momentum. Price percent oscillator heading up. And again, price is trying to push through that weekly trend line. We look at that two-day chart, and of course it crossed over, going up on that prior full two-day candle ending Wednesday the 9th. This latest two-day candle will, of course, close at the close of the market on Friday. And again, about the same thing we saw in the S&P 500. Price movement about the same there. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. We look at that 4-hour chart. And again, down in the morning, up some in the afternoon, about where it was, really a sideways slide. Derivative oscillator losing momentum. Price percent oscillator still heading up, not as strongly. So are things topping out? Don't know. Remember, the market sentiment is still down because of the weekly chart being down on both the S&P 500 and the NASDAQ 100. That's where we are with the stocks. Going back to the weekly, checking out TLT, which is 20-year bonds. We now have gone to a red open box candle. Again, it is not a strong red down candle, such as what you see back on the 9th of November, where things bottomed out. That is the week ending then. But what we see happening is a lot of slowdown, a lot of bleeding off of upward momentum. Price percent oscillator has dropped for the first time since, well, all the way back to where it bottomed out back on the week ending the 19th of November. So again, bonds have been gaining strength on that derivative oscillator. Price percent oscillator's also lost some of its energy. That red open box is not a strong down move, but it is a cautionary tail there. And again, still in a confirmed up move. Price percent oscillator is nowhere near the red signal line. We go from the weekly to the two-day chart, and we can see that we're going into if things keep moving in that direction, things are pushing on, trying to push through the red, the gold trend line that we currently have, and we see that the price percent oscillator is moving down toward the red signal line, and the derivative oscillator has, of course, already crossed over going down. Again, we'll continue to watch and see how these two-day candles end at the end of the day on Friday. We go from the two-day chart to the 4-hour chart, and of course we see there when things topped out on that 4-hour chart all the way back on the afternoon of Thursday, the 3rd of January, things have been pretty much trundling down fairly decently, fairly strongly since then. Derivative oscillator gained some downward momentum in the afternoon after bumping up a little bit in the morning. So again, we'll keep our eye on things and again, just continue to watch since, of course, things are still in a confirmed up move on the weekly and the two-day. If things did turn and revert over before we have a crossover going down on that two-day chart, then we could have a potential for jumping into an up move. So continue to watch those things. Don't expect that to necessarily happen, but want to be aware of it. So we go from bonds to gold. We look on that weekly chart on gold, and again, gold is continuing to have an up candle, a green up candle, and not a super strong one, but it is an up candle. In fact, price movement is not topping as high as the wick did in that prior week. Derivative oscillator gaining upward momentum. Price percent oscillator still heading up. We go from the weekly to the two-day chart, and that's where we can really see some sideways tracking since gold topped out back on the 3rd of January, sort of sliding sideways since then. Price percent oscillator heading down, derivative oscillator losing downward momentum. And of course, we go from the two-day to the 4-hour, and we see things really sliding sideways. The derivative oscillator gaining downward momentum. That price percent oscillator over the last day and a half has really, again, started to tick going down. But again, keep in mind that gold is still in a confirmed up move on the weekly and still in a confirmed up move on the two-day at this time. So if for any good reason that 4-hour chart crosses over going up, then of course be primed to grab that up movement. That's where we are, folks, as we go into the last trading day of the week. You have questions, problems, concerns, let us hear from you. We got in the books for our 8th printing today, and we will be fulfilling all those orders. We appreciate so many folks buying the books. And of course, we have the trader journals available for you as well. You'll see links in the show notes on how to buy the book, and of course the trader journals. And if you would like to be a Patreon supporter and get the goodies we have there, you can be a Patreon supporter too. We do appreciate all your help. As you know, we donate a great deal of time and energy, and the only way that we recoup all of the costs for putting the website together, getting everything out to you, and just doing what we do on a daily basis is with your help. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.